Welcome to the Dakota Housing Network. I'm Greg Larson, along with
Dave Flohr, Mr. Housing, right here.
And the chairman of the board,
pushing buttons, baby.
Jim Walsh.
Thank you.
He's the man, the myth, the legend.
The Jim. Potato salad.
And somewhere out there in mortgage land is Joe Sheehan looking for the best rate.
In that Joe Mobile.
In the Joe Mobile.
Yeah. Listen for the Batman music.
The white
You'll
Ford
find
F-150.
Right.
With a lot of miles on it.
Yeah, right. So he's looking for a mortgage rate. What did he find?
Well, let's see. What did he find this week? It went up. Oh,
up.
I bet you Joe's mad now.
Yeah.
Yeah, it went up. Last week ended July 13th. It was 4.03. That was up from last week when it averaged 3.96, according to Freddie Mac's weekly mortgage survey.
So the headline is interest rates surged up.
Surged up. It cracked the 4. The average rate cracked the 4. It probably, I would say, they say it's the week ending today, but they actually take their survey Monday and Tuesday, I think it is. Mm-hmm. Yesterday, the rates came back down a little bit, and today they're kind of flat. So it's probably right around 4 will be an average normal rate. The market seems to be, it's just riding that kind of yo-yo in a small range. No big activities. Our good friend, who I don't know her, but she's a good friend, Janet Yellen from the Federal Reserve Board. Because she kind of drives our business a little bit with she says. And do you want to hear what she said?
I do want to hear
this
what
week?
she said. It's always insightful.
She testified at the weekly or monthly, whatever testimony she gives to some committee in Congress. I assume it's a finance committee of some type. This is what she said today, or I think it was yesterday she testified. That expectation is based on our view that the federal funds rate remains somewhat below its neutral level. That is, the level of the federal funds rate that is neither expansionary nor contractionary and keeps the economy operating on an even keel. Because the neutral rate is currently quite low by historical standards, the federal funds rate would not have to rise all that much further to get to a neutral policy stance. I don't know what she said, but
she doesn't know what she said.
I'm not sure she knew either, but it didn't make a difference apparently. Really, they gave it. The market said, "Oh, that sounds pretty good."
Yeah, okay. So we're flat.
So we're flat.
We are neither expansionary nor contractionary.
There you go.
We're flat.
Flat. Yeah, that's kind of what the market did. They didn't know what she said either, so they just say, "Okay, well, let's just keep it the same." So, I think it is funny, but they do look and what did she say compared to last time she talked?
Yeah,
and that's what they kind of
go
by.
She was much less inflationary.
So, but I got this from our friend Rob Chrisman, who I actually do know. He writes a daily blog on mortgages,
and he
business and stuff.
That?
I don't think Rob does either. But Rob has actually been at our housing conference 2 years ago, and I've spoken to him more than once, and he's a very, very good gentleman. But he writes his daily blog, and so I don't think he really knows what they say at these things either. But he said what it comes down to is at this point, Rob says you probably skip any thoughts of a Fed funds increase in September, and the odds for December are about 50-50. So Rob's thinking that, and he's probably getting this from his buddies in the industry, that this is kind of saying the Fed's not really going to raise their rates the rest of this year, which will be interesting. So that's about what they planned on, was 2 or 3 times this year, and they've done it twice already.
Yeah.
So, but as he said, the more important question is when the Federal Reserve stops purchasing mortgage-backed securities for its portfolio as it pays off. They've been repurchasing them. Then when are they going to stop doing that? That'll have a bigger effect on the market than the rate increases. So,
so how that relates to
mortgages?
Mortgages, if the rate is not raised or lowered, what is the trend then? Because we're related to the long-term bond market. I
would say if they are not going to raise the rates and they don't make a big change in buying mortgage-backed securities and stuff from what they're doing now, rates will probably come down.
That's what I would suspect.
They're not going to go up.
Down a little bit.
They're not going to go up, more than likely. They probably will trend down. So
they will be marginally contractionary.
There you go. Very nice.
Like that
you
word.
could fill in for Janet Yellen at the next committee meeting, Greg.
Yeah, there you go. Except I can't wear the suit.
You can't.
She wears those suits.
Business suits. Anyway, you could fill in.
Sure. Yeah. Because I know nothing.
Yeah, and you could just come up with some words.
Sure.
Which you just did.
Yeah, I could be expository.
Expository.
The inflationary and the contractionary factors that are impacting the overall extensionary term of a long-term mortgage.
Very nice. Good job. I had no idea what you said, but it sounded really good.
I have no idea what I said.
Wow, that is cool. All
but
right.
It must have sounded really good.
Okay, so that's enough of interest rates and Janet Yellen and all that good stuff. I have something else in there. As long as we're talking Rob Christman here, in his blog today, he had something I thought was pretty good. He started it off with, as Abraham Lincoln said, "Don't believe everything you read on the internet." But what Rob did, he went out and checked to see how many languages there is in the world that's spoken, and he came up with 6,909 living languages, according to the internet.
Living languages.
Yep. How many are spoken in the United States? Quick search showed 311 different languages are spoken in the United States. Now, out there, this is another thing out in industry. CFPB, Consumer Financial Protection Bureau, saying, we should have all the documents translated into languages that everybody speaks.
Sure.
So, they don't have to have translators. So that means we'd have to have all the mortgage documents and, probably your car loans and everything. All the business would have to go through the process of paying to have documents translated and available in 311 languages. That would be a lot of fun, wouldn't it?
Wouldn't that be cool?
And that'd be
How many
something.
of those languages are spoken and not written?
Yeah, and then, who pays for that?
Yeah.
Us.
Sure.
Because the lender's going to have to pay to have the documents available, and then, extra fees, or whatever goes up. There'll be a document translation fee.
Okay, here's my conservative take on that.
Okay.
Whatever happened to English being the official language?
I'm with you. We are in the United States of America where English is spoken.
Who was that comedian who said, the Hispanic comedian, who said, "Hey, man, we're in America now. Speak Spanish like everybody else."
I bet you it was George Lopez.
I think it was.
Probably, yeah.
Yeah.
I think he was being sarcastic there.
Well,
I think you are in America.
I do support
English.
Keeping your heritage.
Yeah, sure.
And your native languages as a second language.
Yeah.
But really.
Yeah. Well, this is the kind of stuff that happens then. It's
right.
Just a simple thing like mortgage documents. Now we have to have new documents for every language, and it might come around once. No, you just moved here, you got to learn the language. Yeah, there needs to be accommodation for you, and make sure that that you are stuff is properly translated to you. So that's certainly important. So
well, in the terms of the famous song from Cheech Marin, I was born in East LA, man. I was born in East LA. We will be right back. We're going out with Willie Nelson in commemoration of Farm Aid.
Whiskey River, take my mind.
Right now, 67.
Dave Ramsey is heard here. Super Talk 1270.
If you had not have fallen, then I would not have found you. Angel flying too close.
Angel flying too close?
To thee.
To thee.
To thee. Yes.
Wow. Hadn't heard that.
I hadn't heard that one from Willie.
Welcome back to the Dakota Housing Network. We are featuring Willie Nelson in our entry and exit music today because today is the anniversary of Live Aid.
Right.
Did Willie play at Live Aid?
Yes, he was at Live Aid.
He was at Live Aid.
Okay.
And,
yes, he was.
But he was at Farm Aid.
Yeah, because an offhand remark, Jimmy, you were saying of...
By Bob Dylan.
Bob Dylan.
Bob was on stage, and he was getting ready to... he was between songs, I think, and he said something like, we should do this for the farmers, too. And they took him up on it.
We should.
Willie and Neil and John Mellencamp said, okay.
Yeah. All right, we'll do that.
Yeah.
And they did.
All right. So, Greg, what's up?
Well, we're talking about housing.
Okay.
And we're talking about the interest rates were were basically flat.
Pretty flat, yep. And Janet Yellen kept them that way.
Janet Yellen kept them that way in a very clear and succinct manner.
Chief of the Federal Reserve Board spoke in front of a Senate committee yesterday and said, "We don't know what she said, but the markets reacted okay to it."
It was the highbrow English, whatever it was.
Yeah, it didn't cause them any.
It was
concern.
An exculpatory statement.
Yeah,
and I don't even know what that means because I'm not a lawyer.
Yeah, but we determined that you could testify in her place if ever needed.
Yeah, I can make up words just like anybody.
Exactly. Right. So she needs a backup. Call Greg in North Dakota.
All right.
Yeah, I'm sure Heidi and
my mind is just going crazy right now.
I'm sure our senators can get you on to testify.
Yeah, wouldn't they love me up there?
They would. You're that kind of guy. You can do it. Okay. No, it's something else related to being able to buy a house. You got to work, right?
Right.
Got to have a job. Got to work. Okay. Well, there was always a lot of talk about minimum wage and should it be raised,
right,
and whatnot, and what's the effect of that. Well, our show's friend here, Elliot Eisenberg, the Bowtie Economist. We haven't thrown anything of Elliot's out there, but he writes a daily blog of 70 words or less.
70 words or less.
Yep. So he did one. It was this week, Tuesday, in Seattle. They raised their minimum wage from $9.47 an hour to $11 an hour in 2015, and then up to $13 an hour in 2016. The first increase had a minimal employment impact. The second damaged low-wage workers. At $13 an hour, the number of low-wage hours worked declined by a whopping 9%, while wages rose just 3%. As a result, low-wage worker income fell on average by $125 a week. Small increases are manageable, but large increases incentivize employers to bypass low-wage employees, finding other ways to take care of the work. Is probably make the people that are there work more,
right?
I would assume, or automate stuff. So I just thought that was interesting coming from Elliot, how you have to be a little bit careful about policies and, the unintended consequences. And we have a lot of that in the mortgage business and the real estate business, unintended consequences of things. So
yes, we do.
Yeah. And another unintended consequence, they're talking about robots replacing appraisers.
Really?
Yeah.
Robots?
We should get an appraiser on sometime if we can find one. And so any appraisers out there, volunteer to be a guest on the show, and we'll talk more about this.
For equal time.
Right.
And we'll get a robot for equal. Very good, Jim. Thank you. But they're talking about robots replacing appraisers, or big data, I guess, in this case.
Interesting. We did talk about drones, keeping them off the roof for safety and making them more efficient. So automating
the evaluation
themselves
process.
Out of a job.
And of course, guess who's at the forefront of that?
Oh, let me guess. Big banks.
Well, Fannie and Freddie. Freddie Mac,
Big
and
finance.
Zillow. One of your pet friends' peeves, whatever you probably call them.
Zillow is
they're
part
there.
of the industry now.
They're there. But Zillow, of course, with their famous Zestimates, right?
Mm-hmm.
Or is it Z-estimates or is it Zestimates? Zestimates,
right.
Which have not necessarily a great track record of being accurate all the time.
They've been forced to put a disclaimer on their stuff about estimates. But
they're saying because they get data from obviously sales and that, and then plus real estate agents, you're involved with them, you pay to have listings show up there and that. They have pictures of the insides of the houses from the real estate agents.
Do.
Okay, so they're saying they're looking at their algorithms and their artificial intelligence stuff and saying we can take the pictures from inside the house and the sales and probably maybe drones I don't know and all this stuff and do a valuation that's as good as what an appraiser could do. That's what their goal is. And Freddie Mac they've started using on a limited basis on some deals, probably like refinancings. They will accept automated valuations where they don't need an appraiser to go out and look at it. They will just accept, hey, this place is in that neighborhood. It should be worth that much. And they don't really look at, they've got the past sales. They might be older sales, because they've got that database built up of sales in Bismarck, for instance, of years. And now they say, okay, you're going to refinance your loan, you should be fine. So that's what they're looking at now. Of course, that's caused appraisers to say, hey, and there's some real things there though. What do you do in a rural property? What do you do with an odd type of home? That sort of thing. What do you see as issues with trying to do automated valuations based on pictures of a house that you took as a real estate agent and what a sale was, a few months ago?
I don't know how that could work. I mean, Freddie and Fannie may say this is okay. I don't know why Zillow is in the mix, frankly. They're a search engine.
Yeah.
They're still a search engine. And I'm not saying that's good or bad, but they're a search engine.
Yeah.
Why they should be involved in that mix, I don't know. But if they're trying to become an online appraiser, and I wouldn't be at all surprised if that's the direction they want to go, I'm going to have a hard time until it's really proven to me that they can be accurate, because even a picture doesn't give you all the information that an appraiser gets. I'm thinking a VA appraisal or an FHA appraisal, where they need to see things that if they're going to go by pictures, trust me, they're not going to be in the pictures.
Right. Yeah. And that was the question. Now, I was reading this, and Zillow's thing is, the real estate agent will be noting if there's any damages or repairs that should be done. Well,
who's saying that?
Zillow.
Okay.
They're saying, because they're in the property, and they would be noting those things because they would, for disclosure purposes for the seller, and if you're a buyer agent, okay, you're going to note this stuff. And then the question was, what do you do with that? If you don't know that there's repairs, that's the real estate agent would be helping the buyer, determining, hey, there's stuff that needs to be fixed here. But is that your job?
It's absolutely not my job.
Yeah.
As a matter of fact, I am not supposed to do that.
Yeah.
Because I am a realtor. I am not a contractor. I am not a repairman. I am not a plumber. I am not an electrician. I am a realtor.
Yeah.
If I become one of these people, or even try to give people advice on that, then I have stepped outside of my title.
Right.
Then I am acting as a contractor, and my errors and omission insurance won't cover me.
Cover it. Okay.
So I'm stuck.
So
if I act as that expert,
so you're not going to do that. You're not going to do that. No, the next thing then, say, okay,
chipped Formica, yes.
Yeah, but if I keep
bad
pulling
electricity, no.
I keep pulling this through. Okay, well, how else would you find out that stuff? Home inspection, right?
Right.
Okay, so I hire our friend Mike Wilson from Mason Inspections to do home inspection. So now Mike's pulled into this, and the home inspector is out there saying, well, this and this and this, and then that's how they're doing their valuation on the home. What happens to that home inspector's insurance? Just like you, their errors and omission. Now they're pulled into that. Are they going to want to be involved in that? Probably not.
Well, and here's the other issue. Half the states, not quite half of the states in the United States, are still non-disclosure states. A disclosure or an inspection is not required.
Yeah, so there you go.
Be interesting.
This is all fine and good, and they're trying to find ways. But is Zillow looking at this? Hey, if we gather all this stuff, then we can sell it to Fannie Mae or Freddie Mac.
That'd be the deal. I mean,
we
they
can
are
sell
a for-profit search engine. That's what they do.
We can sell these pictures of the homes too. So
we're about to take our next break. As we go out on break, we've talked about it here before. The president and CEO of Zillow sold his house recently.
Did he get his estimate?
40% below his estimate.
Okay, well, there you go, folks.
They have a little fine-tuning to do.
There you go, folks.
Their own selves.
All right. So now what? Willie's doing what? On the road again. Okay.
On the road again.
Right now, 67.
The Red River Farm Network. Ag News is here on Super Talk 1270.
Lone Star belt buckles and old faded Levi's, and each night begins a new day. If you don't understand him, he don't die young. He'll probably just ride away. Mamas, don't let your babies grow up to be cowboys.
Love that song.
So we had Willie Nelson with a bonus. Here,
bonus.
Waylon.
And
Waylon.
And
Mamas, don't let your babies grow up to be cowboys or apparently appraisers if Zillow
Appraisers, if some people have their way. Yeah.
Because mamas, if that happens, your boy will be looking for a new job.
Yeah. So maybe more about that on another show. We could maybe
I'd like to look into that a little
try
bit.
and track down some more info and see what people think of that. So okay. So what do you got, Greg?
Well, let's talk nationally what's going on just a little bit.
Okay.
Existing home sales. Now this is existing, not new homes.
So this is
the distinction.
Your house and my house.
Your house and my house. Those nationally are up 1.1%.
Okay.
Which is the first up for a while. It's up 2.7% above last year, but we were dipping down. Once again, let's talk about what that translates into an annual rate of how many homes get sold when we're up 1.1%.
Oh, okay.
5.62 million homes.
That's in May.
That's annualized.
Annualized,
right.
Yeah, okay.
So at the rate it's going in 2017, 5.62 million existing homes will be sold.
Okay.
The new home market is off because builders aren't building because of materials and expenses.
And labor and all that good stuff.
And lots and all of that. Lawrence Jung, who is Dr. Jung, who is the NAR chief economist, we quote him a lot here. He said the job market in most of the country is healthy, and the recent stable trend in mortgage rates, which I would think is fairly accurate.
Yep, according to what we know. Yeah.
Right. Continues to keep buyer interest at a robust level. Those able to close on a home last month are probably feeling pretty happy and relieved. Listings in the affordable price range are scarce. Homes are coming off the market at an extremely fast pace, and the prevalence of multiple offers in some markets are pushing prices higher.
Okay.
He does have a concern that prices will... homes will price out. Typical days on the market is very short. It's like 32 days.
That is. Is that better than here?
Yes.
Okay.
Yeah. You know, North Dakota, let's just jump into that.
Okay.
North Dakota and Bismarck, we never follow the national trend.
Yeah, so now 32 days is national.
32 days is
on
national.
On the market.
63 days is local.
Okay. So double.
Right. One of the things that we have happen at national is we've got both coasts that skew this.
Oh, those coastal people.
Yeah, the East Coast and the left coast.
Yeah, okay.
But if we look at the Midwest, we're more stable.
Okay.
But you know, when in 2008, when the housing market kind of fell apart, we didn't.
Yeah, well, we had oil.
We had oil.
We had oil.
Oil.
I don't know. How are you supposed to say that?
Oil.
Oil?
Oil.
Okay.
Oil.
I say oil, but
yeah. I don't know. So, but we are much more stable. We don't go up and down.
Yeah.
We have a drought. We have what I would call a depressed farm economy. Even if you have a good crop, the prices aren't great.
Yeah.
So our two big main drivers, oil is holding steady, and it's starting to pick up more and more as they're fracking the existing wells and that sort of thing.
Yeah.
And their technology, they've learned how to make money at a lower price per barrel. So it's a healthy, not a robust economy, but it will become so. So our two main our two main drivers of our economy are both flat or in trouble a little bit.
Mm-hmm.
So that affects what happens with houses here.
Yeah.
We've talked about in the Bismarck-Mandan area, we have on single-family homes, we have too many very expensive ones on the market.
Right.
We still have about a 3-year inventory.
Okay. Ooh, boy, that's a lot.
Well, that's based on if this many of these houses sell in a month, based on the numbers that we have listed, it's about not quite 3 years yet. It's actually better than it was.
Okay.
However, the new homes in that price range are okay. If you talk to a builder that is building these houses, they're okay because if I have $500,000 to spend on a house, if I don't see exactly what I want on the market, build it.
Right.
And we have lots, you know, in those
that would be my
parts of town.
That'd be my thought.
Yeah, and so even though if you have one of those homes you're trying to sell it, you need to practice some patience.
Yeah.
That price range is not really in trouble, but it does affect this a little bit. So compared to last year, 2016 was almost a mirror of 2015. 2014 was an extremely good year. 2013 is less than 16 and what 17 shows. So in homes, the home market, even though we're looking flat, it's a strong market. It's a little challenging for realtors that haven't had to go out and look for clients and that sort of, you know.
Yeah.
We're needing to go back to what we did to become
normally do
realtors.
Yeah, right. I know our friends in Dickinson, you know, Ninetta Wandler out there, and we've had her on the show before. Same thing. She said it just Dickinson went back to what it kind of was before.
Right.
The oil.
And it will pick up. Williston is picking up a little bit. Minot is picking up a little bit. All those areas. Across the state, we're at an increase. The east is doing a little better than the west, which is a switch from what it was a couple years ago. So, but in Bismarck, Mandan, we've sold 5% fewer houses at this time compared to last year. The biggest thing is we don't have lots to build right now. They're not developing, or the lots aren't developed yet in Mandan. Mandan is off 38% rural, 16% in town in numbers sold.
Okay.
Now the market is still good there, but they're just not the houses to sell. Bismarck rural is off 27% for the same thing.
It's just not the number of homes.
There's not the number of homes to sell. Yeah. Our inventory in Bismarck is good, and we're up 1%. And we have a good inventory in the market. I just checked single-family homes in the Bismarck-Mandan area. We have 356 homes on the market, and that's through all price ranges.
Yeah.
That's not bad.
And I think I looked for like the first-time homebuyer program where you got a limit here of about 275,000. There's like 100 and some single family detached homes.
Right.
That's not counting condos or anything.
Right.
So that's pretty good. That's much better than it has been.
Yeah, it's a good inventory. It makes it a buyer's choice.
Yep.
And buyers are taking their time to buy. That's one of the reasons that houses are staying on the market.
Yeah.
But there are buyers, you know. So we're off just 1% in price and in sold price. And that's, again, we're coming down in the upper market. So
one way to look at this.
Stable.
One way to look at this, if you got a house in the sub 300,
right,
and you're thinking, boy, you know, we'd like a little more room, more space. Go look at one of these ones, higher priced home,
right,
and you probably might be able to get a good deal.
Yep,
and get maximum price on your home.
That's a true statement.
That's below 300.
If you're under 3, or 3 1/4 and under, and you've got a nice house and you're willing to price it appropriately and not think that it's gold plated, so that you price it appropriately, you can move up pretty nicely, especially if equity.
And most of those homes below, which you just 300 to 3 1/4, they're going to be in town. So smaller lot,
right?
Probably because you got a city lot. So if you want to look at something where you've got a little more land, to go there, it's a good time to go look at that and see what's out there.
It is a tremendous move-up market.
Yeah,
it's
because
a very good
you're going to max out your price on your home and get a deal on
the houses you're moving into are low in value compared to the house that you have. Yeah. So it is a good time to do that. And so the market in Bismarck is stable. It's not a declining market except for expensive homes, and that's just existing homes, not new homes.
Right.
So that's solid. Condos actually look really good, which is a nice change. It's been tough to get condos financed, as you know.
Yeah, as always. Yeah.
And that's changing, but that's pretty good. The twin homes are a good market right now. And so that's good. Now, year to date, it's kind of the same. The numbers of units are off a little bit, and the price is off just a titch, but it's a stable market. So, folks, it's still a good time to buy. It's a good time to shop. And if you're looking to move up into that upper threes type house, you can do real well with it.
Yeah, very good.
Real well.
So the only people that don't like what we just went over was the person that's trying to sell their $450,000 house.
Well, but if they want to sell it, understand what the market is.
Some buyers.
And there's buyers.
Yeah. So talk to your real estate agent.
That's right.
And see, how are you marketing my house?
Go on Zillow.
Right.
Get his estimate. And then get a market analysis from a realtor.
Because as we just found out, even the CEO of Zestimate had to take
kind of missed
a lot less money for his house.
Yeah, but you know what?
But it gives you an idea, a framework.
Zillow is a good search engine.
Yeah.
For what it is, you can't take anything away.
The homes are there.
They keep trying to expand their market, expand their income, and why not?
Yeah.
So there's instant offers they're talking about and stuff. All those things are coming up. So we're going out on what, Jim?
Always on my mind.
Always on my mind.
Housing, that's always on my mind.
Housing is always on my mind.
Okay. All right, we'll be back.
Maybe I didn't love you.
Right now, 69 degrees.
Weekends with Twilight Zone Radio on Super Talk 1270.
In twilight glow I see blue eyes crying in the rain.
And we're back with Blue Eyes Crying in the Rain. And we've been talking about Zillow and Freddie and Fannie trying to take away the appraiser's job.
Yeah.
Let's hope this isn't their new theme song.
Yeah. Well, I would like to have some rain to cry in.
I was going to say, the rain would be a good thing.
Yeah. Well, Greg, credit scores.
Credit scores.
How about let's talk about that.
All right.
Did you know
I've got one.
Yeah, and it went up.
It did.
I heard. Yeah. It was all big news. Jim had it on his news show. That could be his obscure news
Jim
item.
had it on the news show that my credit rating went up?
That could
all right,
Jim. That could be his last thing he could do, some obscure news item. Greg Larson's credit score went up.
Yeah, Citibank and all those guys. Yeah, right. In a decided term from history.
Yeah. Anyway, Greg, did you know that the average FICO score in the country had never reached 700 before this month?
Really?
June, I guess.
The average FICO score.
It finally hit 700 for the first time ever.
That's pretty amazing.
Yeah. I don't know how far back that goes. It doesn't say here. But it's 700 for the first time. Now, for context, folks, FICO scores are your credit score ranged from 300 to 850. So 700 is a very good score. And the average score nationwide finally hit 700.
So when my FICO score was, never mind, it was probably below 300?
Oh, that could be it. And then you saw the big jump.
That's right.
Okay, all right. But no, you should
jumped up to, you have one.
Yeah. Hey! It's 350, but you got one. So anyway, that was big news. Now, we talked about this last week.
Right.
They should be going up even more in the future.
Right. It should never go below 700.
Because the 3 credit repositories, as they're called, they should come up with a different name.
They should.
Credit repositories.
Sounds medical and not pleasant.
Yeah, exactly. Well, and maybe it fits. I don't know. But Equifax, Experian, TransUnion, folks, that's where when you make your credit card payments, your car payments, your house payments, that all gets reported to probably all 3 of these companies, and they produce the credit scores.
Right.
And there's a whole bunch of different credit scores. There's ones that you use for a mortgage and one you use for a car loan and whatnot. So there's a whole bunch of different credit scores. But that's where it goes. But they're making a change starting July 1st. They will discontinue reporting most tax liens and civil judgments, as well as any unpaid medical bills of 6 months or less on a consumer credit report. This is a result of an agreement they made with 31 state attorney generals. I do not know if Mr. Stenjum joined in on that. I don't know.
Wayne, I know you're listening. Let us know.
Yeah.
663-1270.
No, what will that do? Well, that's going to increase your credit score. If you had a tax lien or civil judgment, it's not going to get reported. There has to be enough information about that lien or that judgment for, a name, address, social security number, and something else has to be reported in relation to that judgment or lien. If it's not there, if that data is not there, they will not report it. So that, in effect, will increase everybody's credit score that had that on there. It's not going to increase mine. I don't have one, but it would. If you had one, it's going to bump your score up. Okay, right off the bat, just like that. It's going to go away. Now, you'd say, okay, well, that's a good benefit for those consumers. Especially if it's not a valid lien or just done on a spite. Somebody put a lien on there. Yeah. It's a tax lien, but it's civil judgment if somebody on a spite did something. Okay. Now, here's the problem with it. A LexisNexis study showed consumers with past lien or judgments are 5 times more likely to default on their mortgages. And this LexisNexis, they're putting out a search engine. They're testing it so lenders can access this to identify the omitted information.
Oh, okay. So we didn't touch on that last time.
No, this is new information. Oh, now the problem with this is the lender's going to get a credit report.
Right.
And that information may no longer be on there, so they're not going to see that. So they're just going to go based on what's being reported on the credit score. Okay. Your credit score now, instead of being 580, it's going to be 620. Kind of gets you into the next ballpark to qualify for a mortgage, and I assume also car loans, etc. But then let's say the lender says, okay, we can do this, and they originate the loan.
And then comes
let's
the
say
underwriter.
it's an FHA.
Right.
And okay, no, that loan defaults a year from now, and it's related to, whatever the reason might be. Well, FHA comes back and they look at that and they say, well, there was a civil judgment against this person.
Why did you make the loan?
Why did you make the loan? And the lender's got to buy the loan back. They can't file a claim with FHA, or if they sold it to Fannie Mae or Freddie Mac or another investor, that investor could be doing a quality control review on that loan. And they do this LexisNexis study. Hey, there was a civil judgment on that person. Why did you do that loan? Well, it didn't show up on the credit report. Oh, too bad. You're going to buy it back. So that's the risk that could happen here. So it's a big deal for lenders. So this might be great, to a point. Now, if the lenders start seeing there's too much risk with this, and LexisNexis has a database that the lender then can go to,
and for free, I'm sure.
Sorry, he says sarcastically.
Yeah,
and that is exactly what we're talking about is. The lender's going to say, well, we're not going to take that risk, so let's go over here and have them check this for us. And there will be a fee, and that fee will get passed on to the consumer.
Back to the
So
borrower.
what have we accomplished?
Yep.
Because you had to pay for the credit report.
Right.
For the lender to get the credit report, now you got to pay them to do another search of information.
Which constitutes basically a background check.
Kind of, yeah. So what has been accomplished? Nothing. I don't understand that one. Somebody maybe can explain it to us someday.
Yeah, and by the way, background checks are going up in price.
Are they?
Yeah, if you're going to be like a realtor.
Yeah.
All right, if I'm going to work with a relocation company, folks, that's a company that businesses will hire to sell their employees' homes when they're transferring them. Mm-hmm. A relocation company. If I want to be a relocation realtor for this company, and there's a ton of them, it doesn't matter. The relo companies now want the realtor to have a background check.
Okay.
I'm not sure why, because if you're a licensed realtor, you've already had your background check, and you have to.
You got Dakota ethics,
and you have to maintain that.
All
but
stuff,
you have to have a background check, and those prices have gone up.
Sure, they have.
So,
okay. Well, what do you do?
Yeah.
Unintended consequences of actions taken.
Yeah, and you had something about some fraud or
complaints.
Well,
consumer complaints. Our friends at the Consumer Finance Protection Bureau.
There you go.
Richard Cordray, the director, who also is a friend of the show because Joe had.
We had him on, that's right.
Director Cordray on, along with Senator Heitkamp.
Right.
So we classify him as a friend of the show.
All right.
Because of that. And he's a big dog. He is the man.
He is a big dog.
He is the man.
Yep.
Okay, well, they have
totally autonomous.
They have a consumer financial complaint portal.
Right.
So you can go out and file a complaint against your lender, your credit card company, your realtor, all this. Okay.
You're off the hook, Jim. Radio announcers.
Yep, radio announcers. Well, not yet. Yeah, okay. Top 5, debt collection, facing a debt you don't owe. That's top. you should complain about that. Number 2 is mortgages. And the most common thing is problems when you're unable to pay. Okay, well, you're going to have a problem.
Did you wrong?
Yeah, so that's mortgages, and then the next one is credit reporting, incorrect information on your credit report.
Yeah,
and then credit cards is number 4, and number 5 is your bank account management questions.
Oh boy.
Okay, guess which state had the lowest number of complaints since 2011?
Let me think. Could it be? I don't know. North Dakota.
Ding, 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 ding. You are correct, Mr. Larson, and you win nothing except bragging rights.
Yeah.
Okay, now, we had 1,184 complaints in North Dakota, and now we're a small state.
1,084?
1,184. But we are a bigger state than Wyoming, and Wyoming had more, population-wise. They had more complaints than we did, so we're doing better than them.
Okay.
The only thing this does not show is, California was number 1. Well, that's where all the people live.
Yeah.
Yeah.
And nobody lives here. So what they didn't do with this is, what's the percentage?
They didn't do it per capita?
Per capita thing. Okay. Yeah. So that would be really interesting to know.
Yeah.
And I guess we could figure it out. But it wouldn't be that
you hear this?
The party's over.
It's time to turn on.
Is it time to go already, Jim?
Yeah.
Really?
Party's over.
Well, you're kicking us out, man.
All right.
Call it a night.
All right.
Thanks for listening, folks. We will see you next Thursday.
And tomorrow start the same old